What's going on, guys, and welcome back to another video. So today we're going to be going through why I sold my €11,000 or $13,000 portfolio and my reasonings behind them and how much profit we actually made from this investment. So with all that being said, let's dive right on into today's video. So here we are on Trading212, where you can now see my account balance is only 54 cent, where it was €11,000 only yesterday. So we're already after selling the stocks and withdrawing this capital. So first of all, I'll go through how much we've actually made from this 33 diversified stocks / ETF portfolio, and then we'll go into my reasoning behind why we sold my positions. Now, just before we discuss how much I've actually made from my investments, I just want to say straight off the bat that this is by no means the end of my investing at all. In fact, it will only be the beginning, and we'll discuss the reasoning behind why I sold these ETFs and stocks later on in the video. But again, as it stands, we can see at the bottom here that we made a total P&L of about €2,043 profit, a total dividends of about €100 or so, which probably in the time frame I have been investing is about €6 or €7 a month, which again isn't a whole lot, but again, compounding effect of dividends would definitely have added up over the years. We can also see that we deposited about €10,079 overall in this portfolio, and we withdrew €12,204. Now, there's just three things I very briefly want to touch on. The first of these was a kind of surprise, and it shows that no discount broker is even free, and that was the FX charges I had to pay for selling all of my 33 positions. Now again, it mightn't seem a whole lot, but it did come up to about €60 or €70 just on FX fees alone to sell my positions. And again, obviously we had to pay that when we were buying those stocks as well. Now initially on Trading212 there was no FX fee or charges, but that has since come into play. So I was kind of surprised and a little bit annoyed. And again, I know there has to be an FX fee, I guess, but between €70 and €100 on FX fees was quite surprising to me. Another factor I want to briefly discuss as well before going into my reasoning behind selling these positions was that about 30 of the 33 overall were in the green, which I was very happy with. That's about an 88% success rate or thereabouts, which again I was quite happy with. The exceptions probably being High Tide, the iShares Global Clean Energy ETF, and I think it was the First Majestic Silver as well. So overall, very happy here as well. And again, probably if I had to go through my sectors, probably the financial sector was one of my best, where we had a few, such as Goldman Sachs, over the 100% in the profits. And the technology pie as well was very promising, where we also had the likes of Google or Alphabet Class A, again up over 100%. And just a third point, again, just a touch base here, which will be very useful for people because I got a lot of questions over the last year in terms of paying and calculating CGT. Now, especially here in Ireland, it's very difficult to find any proper information, especially even on revenue.ie, which is again extremely surprising considering that's where you need to pay. But again, we have an exemption here in Ireland of €1,270 capital gains, so any profits exceeding this we need to pay capital gains tax on. So again, I'll make a video down the line when I'm actually paying this, because I do believe it will be helpful for everyone. So now let's have a very brief discussion on why I sold these stocks / ETFs, and there's a few reasons. Now, the first factor or reason why I sold this portfolio mainly is due to the performance and a market bubble. Now we can see on screen here, it's at the start of August, again over a month ago, we made a list of how my top performing sectors and stocks were performing. Now, bearing in mind this was over a month ago and the markets have only been going in one direction, and that is up since then as well. So all these figures could actually be bumped up. If we looked at the final figures, we can see here an example, technology and tech pies here are up 40 and 37% at this moment in time. Now again, if we looked at the final pies, these were up even more. So to have 5 or even 10 when you include both pies, to be all up that much, especially for diversified blue chip stocks, it definitely shows that the markets are certainly in a bit of a bubble. And even when we scroll down this list as well, we can see the likes of my ETFs, communication services, etc., all up over 30% as well. We then have the likes of industrials, real estate up 20 and 25%. Even the bottom here, the cannabis pie at this moment in time was down about 23.5% and it finished up about 3 or 4% in the red, which is a hell of a lot better than minus 24. We can also see down below these two top stocks, Goldman Sachs and Alphabet Class A. As mentioned earlier, we said that these were up well over 100%, well about 108 or 9% each, whereas we can see about a month ago, they were up about 10 to 15% less. Now, it's worth noting, just because my portfolio was up so much does not necessarily mean that I believe there is a stock market crash like immediately on the horizon as such, although it probably is inevitable enough over the next few months, maybe even 6 months to a year maximum, that the stocks will have to crash some stage because markets are cyclical and they need to move up as well as down in value to have a healthy market. Now, if you started investing around the same time as me, which is March of last year, you kind of realize you could have thrown a dart at anything and it's going to go up in value, mainly because we're on a fairly big bull run after the correction March of last year. Now, although I do believe the markets are in a bit of a bubble and my portfolio was a bit overvalued, so that's why I cashed out as such and locked in profits, that was not the main reason because, as you know, if you watch any of my prior videos, it's the dollar cost average in. So if anything, I'd have welcomed a stock market crash because as a long-term investor, that means that you get in at a much cheaper cost when you actually average down your average cost and price. So I'd have been all for that, as you know, which I mentioned time and time again in prior videos. But the main reason why I sold this stock/ETF portfolio is got to do with new investment opportunities, which we'll discuss next. So now that we've taken that €2,000 profit and €100 in dividends as well, I'm very happy to kind of move on to the next step of my investing journey. Now, again, it's worth noting, which we'll discuss in point 3 here, that this is certainly not the end of my stocks/ETFs investing at all. If anything, I'll be investing nearly straight away again. But again, this investments will be in real estate, and it kind of comes into 2 separate categories. First of all, and most importantly, is that we are currently in the process of buying our own house. So obviously, the more money and capital upfront you have here, the less you'll have to pay in a mortgage over time, which certainly makes the most sense at this moment in time. Now, again, when I started investing last year, if I didn't actually invest in those stocks/ETFs, I'd have probably spent that €11,000 elsewhere, especially if there was no lockdowns. So that's probably why I was kind of quite happy that I did start investing, so I'll have that money free to play here as well for when we actually buy our very own house. And the second kind of mini category or subcategory here is that we're currently in the process of looking at some investment apartments as well. Again, there'll be a lot more of this to come when I know a bit more down the line on this channel. So once we have those 2 properties up and running, firstly our very own house and second of all the investment department as well, I do want to start looking into my stocks/ETFs portfolios a lot more and start investing a lot more aggressively, mainly because I'll have a lot more capital at play due to not having to keep on saving for our own house and that investment department as well. So again, once we do kind of settle down there in the next few weeks or months, I will be definitely loading up aggressively across all the different investing platforms. As mentioned earlier, the real estate will be in the investment department. We then want to start looking into my stocks. Now, I do want to start splitting out different brokers in terms of different allocations. For example, I want a growth portfolio, a dividend portfolio as well. I also want to invest heavily as well, once my capital starts to grow, in the S&P 500 solely. So we might actually start looking at setting up a Vanguard brokerage here as well and kind of do it full on professionally. Then I also want to start looking at crypto, which we mentioned in prior videos as well. I do want to start getting involved there on Coinbase. And kind of fourth of all, as just mentioned, the property or real estate as well. So then we kind of have 4 overall investment vehicles ready to go for the long term. So that's pretty much where we're at. I just want to give a very brief update as I believe you certainly should be informed considering you followed me the whole journey so far. And thanks so much to all 1,500 of you. It really does mean a lot. So at this moment in time, just a kind of brief recap, we have sold the €11,000 or $13,000 portfolio for a €2,000 profit or thereabouts, which I'm very happy with. And we kind of went through the next stages of my investing journey in terms of real estate. And then once we have that secured, we'll definitely be going back into stocks, ETFs, etc. and even including crypto, which will be new to this channel as well. So certainly this is not the end at all. In fact, it's only the beginning. And I'm very interested to show the full-on investment journey over the next months and even years. So thanks very much. I'd love to know in the comment section below if you're planning on spending or selling any of your investments to lock in some profits. And most importantly, if you believe a stock market bubble is on the horizon. Thanks very much, and I will see you all in the next video.